Crypto Hotep here with another investing video. We are on week 49 of the Family Portfolio and Dividends Tracker. Now, if you're unfamiliar with these concepts or this tracker, feel free to go to week number 1 in my channel. That in week number 1, I go through my whole methodology and why I'm doing these tracker updates every week. We're just trying to stay consistent, and we're just charting the investment journey with myself and with my family. See, I shortlisted a bunch of stocks and companies for my family to choose from. They chose the ones that most resonated with them, the brands that they love, and we proceeded to use M1 Finance as our broker of choice, because within M1 Finance, you can create one big portfolio and then have sub-portfolios within it. And with that being said, every one of our family members has their own sub-portfolio with the stocks and the companies of his or her choosing. And every week we go through this portfolio and we talk about how we're feeling, the market updates, any news that's beneficial to know, and just, again, charting our investment journey along the way. These videos are for my own edification first and foremost, but if you find them beneficial, feel free to like, subscribe, comment, let me know what you think. With that being said, we'll jump right in, but as always, before we go to week 49, we look back a week prior to week 48. Week 48 saw us cracking the 1900 milestone, 1900 bounce. At 1913.42, we had $2, over $2.05 of dividends earned. We had a market gain of $69.49 with a money-weighted rate of return year-to-date of 4.07%. Let's see what's going on this week. So this week, we trended downwards a little bit. So our balance went down to 1910.75. We did up our dividends at $3.45, market gain of $66.82, and a money-weighted rate of return now below 4% at 3.97% year-to-date. So what actually happened between this week and last week? Well, we got a little bit of dividends here. So I believe it was the 14th was the beginning of this week or this coverage. So we got dividends from the Clorox company. We got dividends from O Realty Company, and we got dividends from Colgate. And so with that being said, again, if you're looking at these dividends, and if you've been following these channels, you know what I'm going to say next, and you see that they're very small, like pennies. They're not a lot. Well, that's because the account that we have is a small account, and we've been building that account up over time. If this is your first time watching this video, look at the balance on week number 1. That's what I'll task you with. Look at the balance on week number 1 and then come back here to week 49 and look at this balance. That's less than a year, and all we've been doing is just buying good companies, keeping those companies, holding and buying through the dips no matter what, and just letting the market do what it does. So I say all that to say, all these pennies of dividends we have, it's going to be a snowball effect, and we're going to accrue more as we keep buying and adding to these positions. Procter & Gamble, 6 cents, and then Caterpillar Cat, 4 cents here. So again, this is one of those in-between weeks where we didn't make a deposit as of yet, and that's completely fine. But let's check out our portfolio here. Let's see what's happened within the week. So if we go bottom to top here, my wife unfortunately is at the bottom. Her balance is $145.54. No dividends earned as of yet. Market gain of a negative $5.69 with a money-weighted rate of return year-to-date of a negative 4.16. Now, Celsius, if you've been following, has been the reason behind this majority of the time. Now, what I will tell you is Celsius had its earnings today, actually, and these were the earnings that I wanted to see. These were the earnings that I wanted to look at because I wanted to either feel good about Celsius and holding it or not. Celsius just made a huge announcement, and they announced that they were going to be buying Alani Nu for $1.8 billion. That's a competitor in that Celsius like sports drink, the energy drink type of industry. They're literally below Celsius in ranking, and Celsius just bought out one of the competitors right there. after hours, when they did talk about this acquisition and their earnings, the stock was up $10 to over $35 a share. Now, who knows if this is going to last until the market opens tomorrow and Friday? We will see. But I can tell you right now, my wife's portfolio will be going up substantially because of this holding here in Celsius, and for the fact that we've been buying Celsius day in and day out. Whenever we get a little bit of money, we've been buying Celsius. So good job for Celsius. Um, they didn't beat the revenue. Revenue slowed a little bit, but their earnings per share they beat, and they've had strong international earnings. And one of the things about Celsius is the Pepsi side of Celsius, or the Pepsi um, Connect, the Pepsi Connect, if you will, potentially could be a gateway into a potential acquisition in the future. So something to keep in mind. So Celsius is down. We have Pepsi down. Google down, and then Tesla has been bleeding out as well. So again, positions in those companies, I'm not worried about at all. Let's go to our middle stock. Our middle up over 8.5%, market gain of 15.28, dividends earned of 60 cents, which is good. And then the balance stays above 200 at $207.62. We know the big players here. Nothing has changed in that portfolio. Nintendo up a staggering over 30% year to date. Nintendo. Again, this company, if you invest in good companies, good things will essentially happen. And Nintendo is a long-standing company. It is also a dividend stock, and it's just a great company with great track record. So it's amazing to see here. Let's look at our youngest next. Balance of 254.96, dividends earned of 33 cents, market gain of $28.98 with a money weighted rate of return of 14.12%. Nintendo, again, following suit over 30%. Starbucks, Apple starting to gain a little bit of traction here and starting to get in the green, which we'd like to see. And then Tesla down over 12%. Tesla you can get on the cheap right now. Okay, let's look at our oldest. Our oldest has a balance of over $600 at $639.95. Dividends earned of 35 cents. I really like seeing everybody on the dividend train. It's good to see. Market gain of $1.50 and money weighted rate of return of 0.29%. So the main hitters here, Apple, Tesla, Costco, McDonald's here. Costco doing what Costco normally does, over 13% year to date. McDonald's up over 4.5%, and then Tesla following suit down over 12%, 12.25%, and then Apple down less than a percentage point there. Okay, and then last but not least, let's go to mine here. Mine decent enough, up over 4.5% at 4.67%, money weighted rate of return year to date. Dividends earned over $2.17, and then the market gain of $26.77. My balance is $662.70. As within last week, all of my sectors remain in the green here. I'm actually surprised here when I look at the growth in meme stocks, because we have Tesla, which is also following suit. So my Tesla holdings is down over 14%, but Palantir up over 40%, CrowdStrike up over 27%, MicroStrategy up over 11%, and then DTE up over near 8.5% right there. We talked about industrials and energy. That still remains my point of focus. That's up near 9%. Again, we're going to keep our eye on that. As I mentioned, with the new administration that's in, with Trump being in office here, industrials, energy, oil, that's really going to take the cake for everyone. And that's where I see the focus being shifted to, if you will. Real estate up over a percentage point. We can hop into real estate just to see what's going on. We have public storage up over 1.5%. Realty Group doing what they normally do. I really just invest in Old Realty for that income, for that steady income that they provide. I'm up over 6.5% with them, and then Federal Realty, we are down over 5.5%, but I'm still holding that no matter what. None of these stocks of mine have me concerned by any means. The pharmaceuticals have bounced back pretty nicely. Johnson & Johnson has bounced back over 11%. Pfizer is going to crack. We're going to start seeing that green on Pfizer too, so watch out there. And I think that's about it, guys. You guys know the rest with the technology and the consumer staples. So right now, the balance sits at $19.1075 with the family portfolio. Dividends earn of $3.45, market gain of $66.82, and then money weighted rate of return of 3.97%. Before we head out here, we are going to go over a little bit of information. There was some earnings, as I mentioned, with Celsius, and then also with Walmart. I keep Walmart in my consumer staples and shopping sector. So consumer staples and shopping right here. It's probably one of my biggest positions in that sector. And they did have earnings this week on the 19th. And they reported, and they had a double beat for earnings, meaning that they beat earnings per share versus their forecast, and then revenue versus their forecast. So essentially, Walmart doing what it normally does. And what I found is most of these companies, if you invest in good standing companies, I don't, and especially if they have dividends, um, investing is pretty much easy. It's an easy game. It's not simple though, because emotion comes into play and then also psychology comes into play. But if you can find those, as Warren Buffett would say, those fabulous or those great companies, you choose those companies and you just hold on to them for a while, you'll be fine. And Walmart being one of them, they pay a dividend. Their business and service model is unmatched, and the data speaks for themselves in terms of their earnings, in terms of their financials. There's really nothing that Walmart can't do. And a lot of times I would say the markets and the economy are based on what companies like Walmart, Costco, what they say in their earnings. One thing that kind of spooked investors, though, was this statement about Walmart being very cautious about the current economic climate and plans to focus on low prices, grow the market share per usual, and balance short-term and long-term goals. So unfortunately, everywhere we turn, we see that the economy, quote unquote, is doing better. But when you hear people like Walmart and Costco being very cautious upcoming for the new year, it does spook the markets. As I mentioned before, markets don't like surprises. So that's why you see, even though Walmart beat both of their earnings and revenue, they were down over 6% on the day. So, and it also kind of maybe foreshadows what is happening in the economy currently as well. So, with that being said, guys, as always, hope these videos are helpful. Feel free to, as I mentioned, like, subscribe, comment, let me know what you see, or let me know what you like. Let me know what you would like to see if I didn't cover. And as always, guys, thank you and happy trading.